All right, everything looking good. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on Sunday, October 2nd, 2022. And of course, as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. If somebody just let me know in the chat, everything is coming through loud and clear. Go ahead and get this stream started. All right, so just getting started with TNX. I'm just going to kind of zoom out here. Take a look. We obviously have a very strong uptrend since we bottomed. We got pretty far away from the 200 on this most recent upthrust. So there is definitely potential. We could see another reversion to the mean. Obviously, still a very powerful uptrend. So it's still a little early to be calling for reversals or anything like that. You know, obviously, we would expect a reversal to correspond with the Fed pivot. So in my opinion, right now, no signs of that in the near future. Obviously, on the shorter time frame, like the daily, it's definitely up at elevated levels. Not crazy to think we could come back down and test some of this previous, like, tops for support. As far as the weekly is concerned, this past week, indecision doji up here, basically open, push up a little, push down a little, and then right back where it started. No signs of topping or anything. Plenty of green histograms. Everything's still bullishly crossed to the upside. We got blue slope line now on the weekly moving averages. You know, for the first time since the flip back in April of 2019. So at this point in time, looks ready to go higher. Short term, momentum is still pretty strong here on the weekly. And the monthly, very, very powerful monthly candle, exactly as predicted. We basically consolidated above the 200s, and now we're seeing that continuation. We have been talking about how this level here was clear resistance on TNX, and essentially the market was waiting for the confirmed Fed funds breakout. And as soon as that happened, obviously we see what happened on TNX. The market confirmed essentially it was a technical breakout. You know, now we've broken out of a 30-something year downtrend, confirmed breakout to the upside. So the same way, we're just going slinky theory, just going down steps on the way down. We're just going to start breaking through those levels on the way up. So very important level right where we're at right now. You know, next level up here at a little over 5%. I've already heard some whispers of people saying 5%. You heard it here first, folks. But you don't have to be a genius to figure out that the next key level is 5%. So momentum still very, very strong. You know, really just getting started on the monthly. So for all the people trying to call the top right now, well, we just broke out of a downtrend. Breakouts can fail. But I wouldn't want to be on the receiving end of this one. TLT breaking down to new lows, new low close. Daily looks pretty bad. You could argue, oh, it's, you know, been getting beat down for a while. It's due for a bounce. I mean, maybe. It's holding on by a thread to the 2013 levels right here. And if it breaks down from those levels, there's a lot of like support along the way. But, you know, we're talking about like 95, even like high 80s. Brutal. Brutal. Momentum still aggressively postured to the downside. I mean, look at this monthly. There's no signs of bottoming. One of the biggest, nastiest candles of the downtrend. I mean, we came down to the 200s. We stalled, and we just ripped right through those. Exactly as expected, exactly as predicted. And we stopped literally at the exact area we said we expected to stop. So we hit the measure moves. We hit that previous low. That's where we closed the monthly candle. So we see the next level is at 786. We see the one after that is this white resistance support right here, right around, you know, in the high 80s. So essentially we just have 2 more steps down till our final target. I mean, and this is just disgusting. I mean, there's no signs of this bottoming anytime soon. If anything, the trend is accelerating to the downside. Now, it doesn't mean this won't be the absolute bottom. I mean, obviously, we're looking for a pivot, potentially. And we know the pivots are likely to happen in quarters or halves or, on an annual basis. Like, bigger the time frame, the more likely area it would be for a pivot. All right, so let's take a look at our major indices. Dow Jones first. So we closed a much lower low, as expected. Momentum still to the downside. Everything pointing to the downside still. When we zoom out here, we look at these levels, and we have taken out the top from 2020. So it doesn't mean it can't act as support in the future, but it looks more likely that we came down to it, found some support around that area initially, and now we're breaking through it. So there is quite a bit of support and resistance all through this area right here. So I don't think it's just going to be, a straight down drop, but it doesn't mean it can't be. We saw that happen during the Rona. On the daily, is it beat down? Yes. Does it have to bottom soon? No, there's no divergence. There's nothing telling us it's going to bottom. When we go to the weekly, the initial bounce was to backtest the 200s. We did. We couldn't get back up here and confirm the bull cross on the weekly. So we got rejected, came back down to the same level, and now we broke through it and we closed a new lower low. Weeks without new lows on the major indices, 0. We're at the lowest lows of the downtrend. So anybody that's buying right now, fully understand that you're either buying expecting to be a bigger loser every day that goes by, or you're buying expecting, like a lottery ticket, your investment could and possibly will go to 0 because you're trying to pick the bottom at the beginning of a bear market that could last for who knows how long. Doesn't mean that this won't be a good buy 10 years from now, but just know that you're trying to pick the bottom. Everybody else that tried to pick the bottom so far, for this entire year was a loser. They were all losers, except for a couple of people that picked the bottom around here and then sold around here. We're all winners. And if you bought right down here, rode it up and didn't sell, you're a loser. Not as big as the loser if you bought here or if you bought here, but you're still a loser. That's all that matters. Not like as a person, but like, for that trade. That's why it's so important to be trading with the trend. And I think the easiest thing, everybody's always like looking like super hard for some secret, some magic serum, some, indicator that's going to predict every move and, give them an edge over the market. When the easiest edge is right there in everybody's face. Just trade with the trend. If you trade with the trend, immediately you gain an advantage over the market. 99% of the time, markets, well, maybe not 99. 90% of the time, markets are trending. I mean, look at the Dow Jones monthly, trending forever to the upside. When did you not want to be in it? Well, when the trend was bearish. When the trend was bearish, you didn't want to be in it. The whole rest of the time, you want to be in it. Give this chart to a little kid and tell him, hey, cross out the areas that are red. And then tell them those are the areas we don't want to be invested. And they could go through here easily and just cross out this area and cross out this area. And then the rest of the time, what? They're going to have you invested. The little kid could do that. Well, what we see right here is telling us we're entering into one of those times. We don't know if it's going to last this long. We don't know if it's going to last this long. We don't know if it's going to go down 30% or if it's going to go down, 80%. We don't know. But we know that historically, all the bad times have triggered these same signals before it happened. So we'll see what happens. This monthly chart looks terrible. We just confirmed the bear cross on the monthly. Here we got saved by fiscal and monetary policy. The only thing that saved this chart, that saved these markets, that saved, the world economy / investment markets was fiscal and monetary policy combined. Massive, massive stimulus, around the world in the tens and 20s of trillions of dollars. That's what caused the bottom right here. We don't have that. We have the opposite. A bunch of, Fed governors Fed presidents came out and said, we're not pivoting. we need higher rates for longer. They just said that. So if this was the candle right before the pivot, when they came out and did all that stuff in 1 month, is it possible we're about to get, a 1 month candle that looks like this? Without the bounce, maybe 28%, 7,200 down on the Dow in a single month. Is that possible? Is it likely? Is it probable? I mean, I would say yes. I honestly would say yes. Now, I mean, it doesn't mean that's going to happen, but this is the highest risk for it ever. If you showed me a chart and tell me, hey, when's the worst time ever to be long something? I would say, hey, right now, after we just confirmed this. And you're like, but right here, that was the bottom. But we had the Fed and we had the government on our side. And this is worldwide, not even just, Central Bank of the United States and the United States government. I mean, we saw, coordinated efforts around the world to stop this. And this was happening on all asset classes. So if we don't have that right here, this seems like the highest probability that we're about to just get a big nasty candle. Now, could anything happen? Could the Fed pivot right here? Could they pivot right here? Could they pivot right here? Sure. But let's wait till we see some signs of a pivot. Because right now, everything looks really, really bearish to me. What's up, Gigabyte? Good to see you. Hopefully you're doing well. If you're here in the chat, make sure you say what's up. Let's look at this S&P chart. So I showed this off a couple of times here. And this is just the S&P chart with superimposed. And again, the chart looks exactly the same. We can look at the, bottom right here to the top, and we see we're at the 382 of the Fibonacci. So we probably find some support right here. Maybe we already did. Maybe this was supposed to go higher. I mean, look at if we just move this up a tiny bit more. Like right around, well, maybe not. Maybe not on this one. There was a couple of them that if you move slightly, it looked like perfect. So we're hitting the 382. We're hitting the majority of the measure move. We superimposed the chart from the 2008 crash right here over the S&P. And this is what it looked like. That's what the 2008 crash looked like. So, I mean, obviously, we don't know how it's going to happen. We can go to the monthly. That's what I superimposed it on. But just to get an idea of what this move could look like. Now, all it is, it's just 2008 crash right here. Just put right over top here. It's not going to be perfect. It's not going to happen exactly the same way. But the equivalent crash just brings us back down to the 200 exponential and then 200 simple. And then eventually, we make a higher high, which would be the equivalent of 2027 would be our new higher high. So it's only 5 years, and if you bought down here, who cares if you're making a higher high because you're riding it the whole way up. But if you bought right here, right now, at the 382, and then at like 100% round trips or 88.6 or 786, we're talking about 27 to 35%. Does it have to happen? No, but the potential's there, and that's all that really matters. We just need to pay attention to that because we have, all red histograms, red slope line, all the Stochs angled to the downside, the furthest they've been away from each other this entire time, just accelerating to the downside. Knife is at low levels, but keep in mind, this is not bound by the 0 to 100 spectrum. The knife can go negative, and it can go to a gazillion if it wants to. But that being said, doesn't just mean this is going to be the bottom. I mean, we could easily see a divergence on the knife and actually have a whole nother leg down with a lesser stab on the knife. So most important thing, we just confirmed the 821 monthly bear cross. We just closed a new lower low. And the last time we did that was in 2001 and 2008. So everybody that's been saying this is nothing like 2000, this is nothing like 2008. And the whole time I've just been warning, hey, there's a possibility that at some point in time in the near future, things are going to start looking a lot like 2000 and 2008. And, I know I'm not the only person who said it, but I was definitely in the minority. Well, here we are. We're at new lows. Keep in mind, this candle right here was enough to get everybody tricked back into being bullish. This little candle right here was enough, even though it was doing exactly what we said. And now here we are closing new lows. So careful who you're listening to. Everybody seems smart in the bull market. So if you if you found some good people in the bull market that are great at technical analysis and, really helped you to grow your portfolio, just remember that was in the bull market. Everybody looks like a genius. There was people making millions of dollars trading NFTs. Somebody posted in the group, NFT trading crashed by like 97%. So there's still 3 dudes trading NFTs for every 100. All right, triple Qs, again, new lows. So once we take out this low right here, we know what time it is. We came down to the low, we retraced 50%. We did exactly what we said. We banged our head on the descending resistance. We banged our head on the 200s. And where we go? Round trip. Ooh, all aboard, round trip. Giving back all them gains. Should have booked those profits. Lesson learned. Obviously we booked profits, but other people didn't. So maybe this is our A leg down. Maybe this is our B leg. And maybe we're about to get our C leg. And then that's it. That's the worst of it. It's definitely a possibility. I'm only bearish as long as I have to be. I don't want to be bearish. It's easier to be a bull. You're definitely more popular. We're telling people how to make money than not lose money. Obviously, none of this is financial advice. But anyway, NASDAQ 0.5 right here. So, it's already overshot the 382 by a ton. It backtested the 236. The most sensible target is that $261 level. Now, we talked about the potential for a pivot. Not necessarily as in we're not going to keep making new lows, but the possibility that we're going to see a, year-end rally or something like that. So, we've got 3 months left in the year. If we're going to see a Santa Claus rally, historically speaking, November, really from like Halloween till the end of the year is typically bullish. So the end of October, so you pretty much have all of November and December. So we've got this month to make it through. Is it possible we have another gross month and then 2 months of rallies in assets? Yeah, I could definitely see that. I could totally see that. And we could come down here, hit the rest of our targets all over different asset classes, kind of just linger around. A month goes by, we go higher, we go lower, and then finally towards the end of the year we come back up and we just revert to the mean again and back test the 200s. Could look good on paper. But you know what doesn't look good on paper? Markets right now. The monthly Q looks terrible. Again, confirm that. We have not confirmed that bear cross since 2008. So, across the board, with the exception of the trash Russell, which just always looks like trash, none of these other major indices have even done this for, at this point in time. If we're talking about, this cross happened technically it was in 2008. The cross happens in 2008. We haven't done this stuff for like 13 years, 14 years. That's a big deal. So even if we're to say, oh, we haven't done that for 14 years, so we're just going to correct and then we keep going up. Okay, so what are we correcting? Oh, okay, so we're correcting 14 years. So let's just assume that any corrections we're putting in are going to be the last time we saw that bear cross. So let's just assume we're going to correct those 14 years. Well, what does that actually look like? Just at a glance. Well, the initial area where we would confirm that that's what's actually happening is a 236. So that would be 213. So we're at 267. That would be 213. So that's another ways down. And then after that, the 382 would be a shallow retrace. The 0.5 would be a Dow theory retrace. And the 618 would be your historical, deepest, most technical bull retracement, or, the golden retrace. So, that's 140, 101, and 73. It sounds crazy. We're going to go down another 50% for right now to get to 140. We're going to go down another, 65% to 103 or whatever. I don't know. It sounds a little intense right now from where we're at. But if that's what we're really going to do, if we're going to correct the last 13 years, it makes sense that we're going to correct the last 13 years. I don't know. And when we look at the Qs, now granted, this is obviously skewed, but when we corrected the move from, this was our .com bubble burst. So tech didn't make a new high right here. S&P didn't we'll go to NASDAQ and S&P. Obviously Russell doesn't make a new high right here. This retraced close to 78.6%, and then just went parabolic for 13 years afterwards. So just because we have a deep retrace doesn't mean, we're not going to have a massive bull run afterwards once we get out of this. I mean, the world's set up. If we fix some of our financial issues, I mean, the world's set up for eventually a massive rally, but who knows if we're going to have the stomach for it. But right now, I mean, the momentum is just all to the downside, and this just looks brutal. The next real support on the Qs is way back at the 2020 highs. So it's 219. And that same level is the macro 236 basically. So, are we going to come back down and backtest the strongest resistance we had along the way that's left? I mean, there's only 3 candles left. This is only 3 monthly candles that took us from the peak in 2020 to where we're at right now. So it took us 3 months on the way up. Maybe it takes us 3 months on the way down. I don't know. Maybe it's more, maybe it's less. But likely that's where we end up. And just so happens that happens to be the 236, which seems like, I would say, a pretty likely target, if we are retracing the 13 years, which, that was a 13-year bull run. So I don't know. It depends how you look at it. I mean, there's a lot of people that would say that, oh, well, technically we entered into a cyclical bull market in 2013. So, on average, they should last for 20 years. So we should have till 2033 and blah, blah, blah. Shit doesn't work like that. I mean, I wish it did. I wish everything went on like the Bitcoin, 4-year halving cycle, but it doesn't. That's the beauty of Bitcoin. It's part of it, is written into the code. Real markets don't work like that typically. What's up, bro? Good to see you. Great bang on stream. Hell yeah, man. Appreciate you being here. So Russell, didn't actually make lower lows, which is good. That's actually good. So, for once, the Russell has something good going for it. But again, when we zoom back here on the monthly and we look, this was our 2018 peak right here. This was 2020. So the Russell is now back at 2018 levels. So the Russell is literally just wiping out, 4-5 years at a time. Steady, just crushing this. Now, there's a bunch of price action in between, which is the good thing about just consolidating forever and not making new highs. You have a bunch of consolidation here. So there's a lot of support around like 146 for the Russell. So maybe it doesn't get as nasty, as quickly. Broke through the 382, so 0.5 seems likely. 153 on the Russell. I mean, it's just super brutal. These markets look terrible. I mean, we talked about the monthly close and what could look good and what the bulls could do to make some of these index closes look like okay or better, or at least just not a new low. And the opposite happened. The bulls were able to do nothing, and then the bears closed at new lows since then. So anything possible the bulls could have done just got bitch smacked by the bears. I mean, as elegantly put as anything else. So on to XLE energy. So we broke down below the 200s. We're back testing the 200s. The 200 exponential is flipped bearish. 200 simple is flat. Still technically has a positive slope. A couple green histograms. We're in the bearish control zone. The knife is back on top of the blue and pink stochastic. So it is starting to try to do something. Doesn't mean we're not going to get another push lower, but I suspect we're going to find some kind of support around this area. Now this initial break of the 200s and then back test is two things very important. It's an attempt to backtest what was support as resistance, and we left the gap up here at 75.75. So maybe we reclaim that level. If we do reclaim the 200s, it looks good, and we put in a higher low. So then the next thing to pay attention to is, can we put in a higher high here, and then can we put in a higher high here? If we do, blue sky breakout, we're back on track. Well, at least cycle high. Now, the problem is often you'll break down, backtest, and then get rejected and go lower. But this initial attempt is just the bulls or people that are currently in a long position saying, oh, I'm going to buy the dip for a higher low before we go higher. But if that fails and we take out this low or we get rejected and start rolling back over, that's basically energy saying, hey, we're going much lower. And then it's time to start respecting like a downward channel or something along those lines. Now we have put in this red resistance line here. We can just toss in a channel real quick. I know this chart's pretty nasty right now, but don't worry about it. Don't worry about it. Forget about it. So we can see now when we look out here, you know, obviously don't mind like the timing of like the ABC or any of that. But we can see now basically that was our bottoming. That was our head and shoulders inverted bottoming pattern. We came up, we underperformed. We ended up putting in, you know, a second point up here. That's now 2 points of confluence for resistance. We tagged it again for a third point. I consider these still to be like the same point, but a back test and confirmation is always really nice. It means, hey, the market is now respecting this descending line as resistance. So it makes sense, even though we only have one touch on the bottom, if we zoom in here, we see actually, look what the market kind of did right here as well. They gave us a wick and then another to push down to the same level, and it works that parallel channel. So it seems likely to me, you know, that there's other people doing this with a channel or something similar. So depending on how long it takes to get down here, gives us a target somewhere inside of this blue box right here, you know, which is our support area between 55 and, you know, $60, somewhere around there. But then when we come down there, it's going to look like a buying opportunity. But in all reality, likely just going to be a buying opportunity back up to like 73 or something. We don't know how long it's going to take to get there. Let's say it takes till we get out here. You know, something like a 25% trade could be in the cards. And then all that is, we break down below the 200 exponential and simple. We find support at the 236 or key levels. We back test up the 200 exponential and simple, capture a 25% profit on that scalp trade, and then assume it's going to get rejected before going to new lower lows. If it reclaims that level and consolidates, well then, you know, long it from there and we can create a bullish trade setup. Right now though, you know, looks to me like a high, a low, a lower high. We're getting ready to put in a lower low. We've got a pretty clear target of where that lower low might be. After that, we can start building structure, but seems very, very likely that that's in fact where we're coming down to. So we'll see in time. But 54, 55 to about $60 looks like a good target there. So XLU has been just straight up melting down. Now, we had talked about this quite a bit, and it's funny how it has developed. So XLU is obviously a safety trade. So lately, everybody's been running to safety, and then, you know, with expenses going up, you know, energy so expensive, everyone's expecting utilities to do well. They historically do well in like recession, depression. Also, it's necessity like consumer staples or, you know, utilities or something like that normally will overperform. Well, we watch this pattern build up here, this, you know, essentially double top M shape, and then the measure move breakdown from that took us down to our key horizontals. We lost immediately both of the yellow horizontals, broke down from that, hit our key fib level, broke down from that, and now we're retesting the bottom of this long-term channel. So we would expect this channel to act as support. Historically speaking, it has for literally, you know, a decade. But that being said, we could get a disgusting, you know, series of candles and wicks outside of the channel. Very realistic that that could happen. You know, that was the Rona dump right there. Does the same thing happen and take us down to like the 50s or something like that? It's possible. It's possible. But I know a lot of people right now, you know, a lot of people missed out on the energy trade, piled into that, and then got wrecked because they were late to the party. They missed out on the utility trade, piled into that, got wrecked because they were late to the party. You know, missed out on just trade after trade after trade, the crypto trade, the, you know, just everything. I mean, these markets are brutal for people that have FOMO. I can only imagine. This thing is very low to taking out that previous swing low. And as soon as that drops, you know, there's a bunch of other series of, you know, lows are over here, but it seems very likely we're headed to 62, you know, as our first initial breakdown and target. And that's just all we're doing is fibbing from the bottom of Rona to the most recent high. And that's just going to give us our target to the downside. You know, I'm real hesitant to put a lot more targets to the downside on some of this stuff because it just seems like I'm just bearish on everything. But the truth is, I mean, it's not me that's bearish. The markets are bearish. You know, I'm just reading you guys the news with a little spin on it, some extra cuss words and, you know, some technical analysis. But I mean, I'm just giving you the news. You know, I don't decide what the bears and the bulls do. And, you know, if I'm mean and talking badly about your assets, it's not because I don't like them. It's because the charts look like shit. So XLP is next. Again, another safety sector. So what is going on here? Why are all the safety sectors breaking down, putting in new lows, melting down? Is there nowhere to hide? Well, maybe not. 382, we're just about to tag. We have the previous high from 2020, slightly below that. That's our target. So we're almost to our next set of targets. Well, what happened the last time we had some serious targets to the downside? It was right around the half ending. We were coming around the end of we started talking about how everything was at like the 200 exponential, 200 simple, etc. on our weekly time frame. Everything was at key supports. Lots of things were at the 236 or the 382, and how typically we would see a bounce somewhere around the half, and that was a typical time that we would see people taking profits or readjusting their portfolios, etc., etc. So now we have 1 quarter left. That was a quarter ago. We saw an awesome rally. We captured the majority of it, took profits at the top, and since then it's been brutal meltdown since. So here we are again at the beginning of a quarter, and to tell you the truth, this seems like a likely area for a pivot. Now, it doesn't have to pivot right now off the 382. Maybe it goes lower. Doesn't have to pivot off the moving averages. Could go lower for a whole month and then rally for 2. Could go, rally for a month, then lower for a month, then rally for a month. I don't know what's going to happen. Might not rally at all. It might just go lower. Might not go lower at all. Might just rally. We don't know what's going to happen. But again, we see the bottom of this channel here, providing a potential opportunity, for another scalp back up to the upside. Now, it's not going to be as good, percentage-wise on every asset or asset class we trade, but, in this case, it would be a 12% move. And the beauty of finding a couple nice setups and picking some of the better ones is that way, if one overperforms, we capture it. If one underperforms, it's not the only one we went with. We went with 5 or 10 or whatever setups. So that's what I'm looking for. I'm looking for, 5 or 10 different setups for some nice trades here to capture some more profit for a scalp trade on the quarter. I have a feeling, now look, I talk about trading with the trend and all that stuff, and trading with the trend is for sure a good idea. 100% gives you an awesome edge on the markets. But the truth is right now, that's what we did. We sold the rip. That was trading with the trend. But we also bought the dip. So you can still buy the dip sometimes, but understand that we're trading counter trend when we take these longs. But I would always rather capture this long to the upside than the short to the downside. Always. I would always rather be long in markets. So even if we're trading against a trend and there's a less than favorable probability for the trade being successful as we confirm into a bear market, doesn't mean these 10 and 15 and 25% moves to the upside, aren't nice and worth taking. It just means it's a lot easier to sell the rips. You know what I mean? So that's what we're looking at. And that's what we're talking about when we're trading with the trend versus against the trend. If we take this trade to the upside or a trade to the upside, maybe on energy or one of these other ones, it can be a very, very nice trade, but it's never going to be as consistent, successful as if we were buying a dip in an uptrend or selling a rip in a downtrend. So that's what we're paying attention to. That's why it's so important. Obviously none of this financial advice, not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So we look at this, we see the DXY. There's not a lot of other charts that look like this. A parabolic uptrend. Why do we call it a parabolic uptrend? Well, it starts off slow, with just a slightly higher low. And then the angle of the uptrend just accelerates. It just gets more and more aggressive. We see it starts off, this is the uptrend, it's nothing. And then, after that, from this point right here to the next set, okay, it's starting to accelerate. We see the uptrend, the slope is getting more and more intense. And then again, we start connecting some points through here and it's getting more and more intense. And, at some point in time, obviously it has to stop. The excess acceleration cannot continue. But it doesn't mean it has to be anytime soon. And you're also going to have these little breathe in, breathe out, breathe in, breathe out, breathe in along the way. So the key thing to pay attention to for me is if you're going to try to start calling, the end of this trend, well, obviously this one's not really that relevant right now, but worth paying. Well, I think that's the one we could pay attention to. Let's look at this one. We have a key little cluster of points right here. We touch one right here, pretty big cluster here. We kind of poke down through it, find support again. So that's the ascending support line I would be looking for. So, using our normal methods, ascending support, combined with the 8 and 21 moving averages on the daily, combined with our indicator oscillators, looks like right now we probably have a little more downside. We're seeing multiple red histograms in a row. We've left the bullish control zone. We're about to get a hard sell signal as the stochastics cross to the downside. We already broke down from the 8. We're likely to test the 21 next at 111 on the dollar. After that, we have this ascending support line. Let's say it takes a couple days to get there. Maybe we get down to 109. Maybe we burst down through that and pull one of these little guys. We got some key support about 107. Maybe. It's definitely possible. And it wouldn't, I don't think that would violate the trend at all. If we then lose that level and start putting in lower highs and then consolidating around here and then start breaking down, then we still have the 200s to pick us up. Depending on how long it gets to them, you know, maybe it all lines up right around this area, right around that 106, 108 area. But the thing is, the most important thing is, all of that has to happen to even start getting bearish on the dollar. And even after all that happens and we do retest the 200 exponential and simple, let's say we come all the way down here tomorrow and we just have a giant red candle down and we hit the 200 exponential and then we come down to the 200 simple. And then it's like, oh my God, the dollar's crashing. It's going to zero. It just dropped, 10% in a single candle. Oh my God. But the truth is, technical analysis, trend trading tells us that dip is to be bought. And you're like, what? If it crashed $10 in a day, it's the end of the dollar. There's no way 10% down. I would never buy that. You got to be a goddamn idiot. Maybe, but that's what everybody else is going to do. That's what bots are going to do. That's what algos are going to do. That's what market makers are going to do. That's what traders are going to do. That's what anybody that uses moving averages is going to do. They're going to buy the 200 as support and then assume we just go higher. Is that going to happen? I don't know. I do not know, but seems likely. I mean, this thing's going straight up. It's definitely an aggressive uptrend. So is it a top now? Because we had, this little rejection candle right here. Is that the end of it on a weekly? Bunch of green histograms still. 200 exponential crossing up inside the bullish control zone. Bulls clearly in charge. Do we have any other selling candles along the way? Yeah. Yeah, I don't see anything on the weekly telling me we should call the top on the macro trend. What about the monthly? Well, it's a pretty bullish candle on the monthly. Maybe that was a squeeze and that's the end of it. I don't know. We'll see. It's probably going to test to the upside here again. In the bullish control zone, all green histograms, blue slope line. 200 exponential accelerating to the upside. 200 simple accelerating to the upside. 821, all bullish posture. All bullet, everything. There's just nothing here at all that tells me, short term, maybe on the daily, we're like, probably cools down a little bit on the dollar. I could see that. But the actual long-term trend, nah, zero danger right now. In zero danger. I mean, this is exactly what we expected. There's a big cluster of resistance all through here. So from here to here, from basically 112 to 120, it's going to take some time. It's going to take some effort. It could take months of just bouncing around, rejections, and then pushes back up and, a fight that takes place. And it should take months. It took months right here. I mean, this was literally, we're talking about years back here. This is 2001. So we're talking about 20 something years ago. And a battle raged on from, the initial rejection right here was in May of 2000. And the battle raged on until May of 2002. So for 2 years, the dollar had gone parabolic and went to absolute fucking war right here before eventually it topped out and went lower. So let's say this is going to top right here. Maybe it takes 2 years. What's that going to do to the financial system if the dollar just bounces around here for 2 years, puts in a lower high, and then goes lower? Are you prepared for 1 year? Are you prepared for 3 years? What does this say about the dollar? What does this say about the world if we put in another in a series of lower highs? Just continuation in a macro downtrend seems possible. Obviously that would be a rejection, a failure to hold the 200 exponential and simple. If we come all the way down here to the 87s, likely we come down to a new low. Below 70s after that. If all that happens, if all those things happen, we still got like 2 years, right? Of just going sideways. Maybe we get a parabolic blow off top like this. Maybe it only takes 8 months, 1 year to do it. It's definitely a possibility, but right now, there's no reason to try to pick the top right here, especially when you could get chopped up, in a 6 to 10% move either way pretty easily right here. And then the trend goes the opposite. We could push up here 6 to 10% and then get rejected and go straight down. We could push down here 6 to 10% and then reject lower prices and go straight up and just rip through this. At which point in time, we're headed back to all-time highs. Keep in mind, there's nothing from this point in 2001. We're going back to 1986. Anybody that was trading these markets back in 86 is probably, dead or senile or close to maybe both. I mean, and even then, we're talking about, maybe a 2 or 3 year period from June of 83 till roughly November of 85, a couple year period right here. There's not a lot stopping the dollar from just ripping Not a lot. And, what is that going to look like for emerging markets? What is that going to look like for dollar-denominated debt, euro dollars, etc.? All right, on to Tesla, everybody's favorite shitcoin. So Tesla obviously did close a lower low. Not good. We talked about that. We didn't want to see a lower low. We didn't want to see a close below 270. We obviously closed below 270. Tried to push back up, got rejected. Confirming into a bear market again. We did right here once. We back tested it. We put in another in a series of lower highs. We now have that M shape double top right here, and we know what happens. We've seen this book, this movie, read this book, whatever, a million times. We know what happens. If we break through this M double topping pattern, the measure move to the downside, depending on if you want to go from wicks or candle close, either one. If we just go wick to wick right here from the neckline and assume a breakdown, the target is basically 223, the measure move. We already came down once and we tagged the 236. So essentially what happened? We came down to a technical area. We had a very powerful bounce. We back tested the 200 exponential and simple after confirming into a bear trend, attempted to stop that confirmation bear trend and see continuation to the upside. The continuation was back tested twice and rejected with a double or triple top. We're now breaking down from that topping pattern. The next level of the measure move would take us down just slightly above our previous lows to a slightly higher low. If we can hold that area and move back up, perhaps we can recharge and attempt to test the top of the range, the moving averages, and the previous high. If that does not happen, which, we're in a bear market at this point in time, this was the confirmation, this was the rejection. Elon Musk and all the little culties couldn't save Tesla from the bear market. And now the measure move breakdown, the back test of the 236 again, another in a series of lower highs and likely lower lows. And then we start looking at our blue 236, which is our first macro target to downside. And the difference between if you're charting Tesla from the low in 2020 in March, or if you're using the macro low from May of 2019, I suspect there's going to be the whole way people using both. So in my opinion, it's nice to use both. We see how clearly we bounce multiple times off the macro 236, and that's likely where we're headed again. When we get down to the blue 236, there's a good possibility we see a bounce off that as well. Likely what happens is we break through the green 236, we hit the blue 236 at 179. I know it sounds crazy right now. It's another $90 to the downside. We bounce that 179 all the way back up to 210, probably overshoot because it's Tesla and come back up to somewhere around like 250. So there's going to be some opportunity on Tesla, but right now the truth is the opportunity is to the downside. Now the bulls are still holding on to this now, so they could save it right here, but technically we've already broken down, attempted to move back up, it got rejected. So likely what happens throughout the rest of the week is continuation to the downside. Now, what are we talking here? We're talking about a decent move. 15% is the measure move right now. Back to the 236 is 21%. And then if we're looking at the blue 236 on Tesla, and keep in mind, Tesla trade is arguably like the widowmaker. People have been shorting Tesla since it was like double digits before all the splits. So, do it at your own risk, but 32% downside is the retest of the blue 236. And what would be the invalidation for a Tesla short right here? I don't mean to be so casual about it. Obviously, if there's potential here, there's potential here. But to tell you the truth, I prefer typically not to short super culty stocks and also like the strongest horses. Of course, I say that while we have the Apple short still alive, but it's one thing to run around in a lightning storm. I'm not going to run around in a lightning storm, holding a big metal pole. I don't want to short Apple and Tesla at the same time. I mean, but 18% would be a back test of the top, and we're looking at 32%. So we're already a little ways down from where you would want to enter with a traditional trade setup. The argument would be that you're going to take a super tight stop loss and just look for the immediate leg down and then move your stop to break even. And then if it doesn't happen and we push up, good riddance or whatever, or maybe you can get a better entry. I mean, realistically, if we could be patient and get lucky, a combination of patience and luck, I don't know if we'll get back up that high, but there's an actual trade setup then that's legitimately like functional. You know, obviously we close above here, target's still the same. Now it's 38% down and 6.68% stop. But I don't know if we get that. We'll have to see if we can get a push back up here. I mean, it doesn't seem unrealistic, you know, and then the entry is basically 290. So we'll see what happens. You know, I'll keep you guys obviously updated in real time as it happens. But that's the area I'll be looking for. I'm not going to chase Tesla to the downside. So Microsoft broke down from the 382, you know, on the way to completion of our head and shoulders measure move. Beautiful. Series of lower highs, series of lower lows, headed to the 0.5. I'll get you Microsoft at 216. What will I do with it then? Will I scalp it? Or will I hodl? Am I going to cradle my Microsoft stocks like a little baby and just love them and hold them tight to me and just nourish them? No, I'm going to fucking scalp them. I'm going to sell them as soon as they're in profit for something decent. I'm going to dump them on some sucker's head before we go lower in this bear market. Everybody should be thinking like that, okay? Everyone, every one of us should be thinking like a predator. If, you know, if it's you or the market and only one of you gets to eat tonight, who's it going to be? It's going to be you or the market. It better be fucking you, or you're not going to be playing this game long. But everybody already knows that. So 23% if we get to buy the dip on Microsoft at the 0.5 for a back test of the 200 exponential and simple. Could fall short here and back test the 382. Could overshoot and hit the 236. Somewhere around here is our target on Microsoft, about 266. Looking to buy at about 216. Running a pretty tight stop loss when we get down to that level. If we overshoot the 0.5 by too much on a daily close, I'll just wait and look at the 618. I'm not going to, you know, just take a stab at it for no reason. If we start closing daily candles below the 0.5 aggressively, more than, you know, I have like 3.5%, but, you know, whatever you're comfortable with, I'm not going to enter that trade. And I'm going to look for signs of a bottom or a technical, you know, support at the 0.5 or some kind of rejection or bullish divergence or some kind of signal of exhaustion. I'm not just going to buy the second we touch a 0.5 because we could literally just fall straight through that and go to the 618. I would not be surprised. That doesn't change my mind. I'm not like, oh, now I don't want Microsoft. It's the opposite. It's the opposite. Now I want it even more. It's like the meme where he's like looking over his shoulder. Ooh, look at that. You like Microsoft at 215. You're going to love it at 192, baby. So looking for something along those lines. But the truth is the macro, you know, again, 236 is what we're paying attention to, which is 166. So, you know, is this going to melt down and just completely crash down? I mean, it depends. It depends what we're correcting. Are we just correcting this leg right here from 2020? Are we just correcting that leg right there? Or are we correcting, you know, this gigantic bull trend that is Microsoft's existence going back to 2009? You know, that's our real question right now. And no one knows the answer. No one knows the answer on earth right now. Are we correcting the 13-year massive parabolic bull trend? On some charts looks a lot better than on others. Let's keep that in mind too. Are we correcting that? Or are we just correcting this little itty bitty guy right here? I mean, so far, a lot of stuff has taken out the highs from 2020. Some stuff, Meta, has taken out the lows from 2020. I mean, at least Microsoft's still holding up. But if the floor drops out, I mean, it's not crazy to think we just take a leg straight down to 166. I mean, you know, that's worst case scenario. I mean, worst case scenario is it goes straight to zero. Zero. No, I'm just kidding. Worst case scenarios, I mean, we would find at least some support at 166. You know, and honestly, there's enough circuit breakers in the markets. It would take a long time to get down to like super low prices, but we would see it because we were in a downtrend and it's just continually melting down. So it wouldn't be a surprise at all. So Apple, obviously we took some profits on our short. Very nice. Congratulations to anybody who participated in the Apple short. We got some more targets to downside. Looks like we're quickly headed in that direction. We see the 236 slightly lower. That could be a definite possibility for a short term, you know, at least, I don't want to say short term bottom, but at least some kind of support. But in all actuality, we're looking for like, you know, 116, the 382, and this previous support area right here that held up pretty strong. And this is a massive consolidation going back all through 2020 right here before it finally broke out. And now here we are. We gave all that breakout back. We're back to the breakout level. And then if the breakout level fails, you know, now we're talking about that whole entire run up gone. And that's where I'm taking profits on the remainder of Les Short Position. So Google finally broke down from support, and it looks like it is in the process of our ABC. We have an A leg down. We have a B consolidation for our bear flag, followed by another leg down. We're just assuming at this point in time that we're going to get something similar to the lead-in leg or the flagpole, or however you want to call it, for bear flag. So we're in the process of that. I mean, we're halfway there now. Congratulations, guys. We did it. The exact thing we expected played out again. So we broke down from the channel, got the measure move, took us down to the 382. That was the first leg of, basically our 3-part series that's going to take us down here, potentially the 618. Next target on Google, 87.49. It sounded crazy when I was calling for, Google down here at $100. I mean, it was 2,000, but with the split and everything. And then it sounds crazy, when I start talking for sub $100. And now it sounds crazy. I know it sounds crazy to say, oh, Google's going to 76. But it's not going to seem as crazy when we're at 86, our next target. And then 76 is only $10 away. And then when we're at 76, I mean, shit, 50 is only a couple bucks off at that point. Who knows? Meta just melting down. I often say something's going straight to zero. It's a joke off like an old like Bitcoin speech. And I'm joking and just like being a troll when I say that. But the truth is, that is like actually going to zero. I mean, I don't know if it'll get there, but it's trying. It's trying really hard. This is October 2016 right here. So if you bought Meta anytime since October of 2016 and you didn't sell at a profit, you're a loser in the trade, not at life. You're a great person and very successful at life. And honestly, I mean, if you're listening to me, you're obviously awesome. But your trade is a loser. I mean, that is pathetic. This has got to be one of the worst charts. I mean, just absolutely pathetic. So, I mean, we're almost at target. Again, sounds crazy when I'm calling for 118. We're up here in the 300. We broke down from 318, and I was like, I don't know. This could get pretty nasty. $118 sounded insane. Now here we are, melting down, going straight to zero as fast as it possibly can. As fast as people will sell it. Amazon still holding up much better than most things, actually. So Amazon is still holding the 618. It's still holding a clear higher low right here. Now, do I think Amazon's getting ready to just take off here? Not necessarily, but there is a possibility. Let's just say, hypothetically speaking, you're like, give us your bull case, okay? Or I'll unsubscribe. Okay, here's my best attempt. You ready? We put in a low. We came back up. Back tested some key resistance. We came down here. We're putting in a higher low. We're at a key pivot point. Potential swing. A lot of the other market is much weaker right now. But sometimes when things are bottoming out, strong assets will put in a higher low. Other things will put in, a same low, a double bottom, or even a lower low. And then they'll still bottom from those levels. So it's possible something like that's going on in the broader market. It is possible. Okay? And that's not sarcasm. I'm saying it is really possible. There's a very, very strong support level for Amazon. So if we came back down to that level, I'm not sure that it would break anyway. So maybe we would just come down another like 10%, bottom on that level again, bounce up, and then we'll have to see, do we put in another lower high? Only bounce to the 0.5, only bounce to the 382, back test the 200s again and get rejected? Or can we put in a higher low? Can we put in a double bottom if it does come down lower and then break out and go higher, and that's the beginning of an uptrend? Yeah, it's possible. It is definitely possible. I mean, obviously this looks like a macro, Wyckoff distribution, as I was saying the entire time, and then, played out beautifully. But doesn't mean that this isn't the bottom. So, there is a possibility. Whew, that was actually very difficult. You guys can't see it, but I broke a sweat there trying to be bullish. It was probably the hardest work I've done all day. So, you're welcome. I did that for you guys. All right, on to the cryptos. Hopefully everybody's having a good night tonight. I know it was a nice weekend. Okay, so Bitcoin obviously been going absolutely parabolic. We had our massive double top. We're very clearly in a bear market. It has been drastically underperforming the markets as it continually melts down and cannot get anywhere near the 200 moving averages. Consolidating at the lows. Looks like it's ready for the trapdoor to just fall out and another leg down. Most likely, like, I mean, 16.5K, then probably 14K is what we're looking at. There is a decent amount of support in this level from 2017, 2018 peak. So, you know, there is a decent amount of support between 20K and 14K. I don't think it necessarily just be a straight drop down, but it could be a slow grind. And this does not look like a bottom to me at all. I mean, people always say markets don't give you a chance to sell the top or buy the bottom. This is about like 10 chances to buy the bottom if this is going to be the bottom. So for me, if you get this many opportunities, you know, to buy the bottom, probably not the bottom. You know, you think about it like girls, you know. I mean, if a really hot girl out there just giving it away, you're not special. You know what I mean? She's just a hoe. And that's what the markets look like to me. They look like they are hoeing. If these are the lows, they are hoeing the lows. So it seems very likely we are setting up for another leg down. When we look at the daily, it looks like everything's rolling over or already bearish. When we look at the weekly, it looks like a back test of a breakdown from what should have been support acting as resistance back down to new lows, new weekly lower lows here, rejection of the 8. So first step on the weekly, we got to get above the 8, which means we're coming back up to back test of 21 and the 200 simple. So macro bull target right now, if we were just going to say, hey, I can tell you for sure the market's about to go up. Where's it going to? If you get it right, you win a Bitcoin. I would say it's going to $23,608, okay? And if it goes down, I mean, you know, we know. Obviously, we talked about that. You know, realistically, the macro target's like 14K. So right smack in the middle, pretty much, of higher or lower. Hard sell signal, below all of the moving averages. You know, below all of our previous support. Seems like we're ready for a leg lower. All the hope that this was going to be the monthly bottom based on the 821 crosses and the previous 2 bear markets pretty much have evaporated. No surprise. Obviously, I said there was a possibility, but, you know, obviously I have not been trying to call for any Bitcoin bottoms because, well, we're not much lower, which is where I think the Bitcoin bottom will be. So, I mean, when we look at it like this and we see there's one candle right here that takes us to 14K, and then there's a wick here and a wick here at support at that 14K level. And then here we have 2 bodies for support at the 14K level, and then we have 2 wicks. So literally the only time Bitcoin has ever traded between 14K and 19K was 2 wicks right here. So 2-month period back in 2017, December, and 2018, January. And then also on the way up here in November of 2020. So there's 2 wicks and a body holding up Bitcoin's price from $14,000. So right now, should we bet the farm on 1 body and 2 wicks? I mean, I'm not going to bet the farm. I'm going to bet against it. I think 1 body and 2 wicks is going to get, you know, folded up like a napkin. I mean, we'll see what happens, but I don't know. Bears are in control, bearish control zone. Stoch's powerfully angled to the downside. All red histograms, red slope line below the 0 line. 8 and 21 bear cross to the downside, closing new monthly lows. 1 body and 2 wicks holding up Bitcoin's price. It's going to 0. Ethereum, still well off the lows, holding up at that channel support. That was the resistance of the channel. You know, we were talking about the breakout, and obviously that played out very nicely. And then this was obviously our target was the back test of that breakout resistance as support. So this is the last chance for that 1 through 5 setup that we talked about. This is it. So we'll see what happens right here. But essentially, you know, that would be a 1 push up right here, 2, a 3, and then this is the 4 coming back down to find support right here before we put in a 5. So this is the final. We did the choose your own adventure. You know, we plotted out the potential paths of Ethereum. I gave you my base case, I gave you a bull case, and then I gave you a something in between case. And, you know, my base case is obviously the red one on here and has us going to new lows. And then the bull case was essentially the continuation off this point and to higher. And then we broke down from that. So this is the final case that I laid out, which is this 1, 2, 3 up to here, 4 right here, which is the back test of the 1, and then another leg higher for the 5. So Ethereum's still showing signs that there is a potential path to like 2,500. Now, do I think we're going to get there? No, I think we're going, my base case, which is why that's my base case, not higher, obviously. My base case is typically what I think is going to happen based on, educated guess. So it looks to me like we're setting up right now for a 1, a 2, a 3, a 4. This was our 4 top right here, which lined up at the bottom of the 1. Juicy. I mean, beautiful, beautiful. That's our flip. Was support. We break up here, lower high, break down, back test. It acts as resistance, and then rejection to lower prices takes us down to our potential target of Ethereum between 5 and 600, and the macro entry for the Ethereum video. If you want to do like, 12x to 20x your money, buy Ethereum at $500 and then it goes to 20K. It's that easy. So you're welcome. All that needs to happen for that to play out is it just needs to go to $500, and then afterwards it needs to go to 20K, and then you're welcome. So just, don't forget me. But seriously, there's definitely a possibility. I mean, the asymmetric reward from this bear market is going to be potentially massive if you can hang on to your money, your hope, and your will. Because I remember what the bear market felt like when Ethereum was at $80. I remember what it was like. It felt like it was going down forever. And your boy pulled the trigger on some $80-something Ethereum. Wasn't easy at the time. It was not easy to buy Bitcoin between 3 and 4K. I'm going to tell you right now, it was not easy at the time. So it's not going to be easy in this bear market either. Who's gonna be able to do it? We shall see. It looks like we're right about, that's a tough one. We're maybe right about here, like back. If the 200 exponential and simple were extended out, they would be like right around this level. So we're kind of chopping around here. So when we broke down from where would have been the 200 exponential and simple right here, we had another big leg down. And that's the one that took us from like 200 down to like $80. So if we do the same thing right here and we break down from this level, if that was from 200 down to 80, we lost about 2/3 of our value. If we're at 1,200 right now, is it crazy to think we go to 400 or 500? I mean, in percentage-wise, it doesn't have to be that, obviously. Here's 437. That's a cluster of resistance. Here's 312. That's a decent cluster of resistance. Somewhere around here, 385 is a cluster of resistance. Maybe we don't get that nasty. Maybe this all acts as support down here. Something around there. $600 to $700. I don't know. I mean, doesn't seem that unlikely now. I mean, after the initial breakdown below 1,000 and then a push back up to 2,000, that was a $1,000 move in Ethereum. Doesn't seem that crazy now that, I don't know. We'll see. Everybody's like, you're mean to every crypto and every stock, and all you talk about's the dollar and yield. I hate you. So Ethereum on the monthly, we clearly confirmed the bear market. We're still off the lows, which is good. So the next area to watch is like 1,063. Bears are in control. All red histograms, red slope line. Everything bearish for Ethereum. Not quite as bearish. And if we did have 200s on the monthly, they would not be bearish. So that's good. Total crypto market cap weekly. So we closed down here below the 200 simple. It's flat now. The 200 exponential is red. We're below the 8. We're below the 21. We're below both 200s. 200 simple is still kind of blue for now. Well, it's definitely blue, but I mean, it's flat. So any move to the downside, and this just immediately flips red, and we confirm a weekly bear market. And that goes for pretty much like most cryptos as well as the entire market cap. So we're at 888 right now. I think that's a lucky number, so that's good. But, likely next target to downside is 702. 702 billion. That's right. Less than 1 trillion. Trash bag asset. Looks like we're about to get a bear cross here, too. Looks like trash. Let's look at the monthly. It has been a while since we looked at that. Oh, yeah. Look at that disgusting monthly. Just setting up for a meltdown. Did I say 700s? I meant on the monthly. We're going to 536 billion. We're going to 1/2 of $1 trillion combined crypto asset value. And a lot of that's probably speculating in cash via stablecoins. Bitcoin dominance with everything included, hanging out at the lows still. Looks like it's trying to bottom. Hard buy signal coming out of the bearish control zone. Blue slope line on the TJD TDMACD. Still well below the 200 exponential and simple up here at about 55. Is Bitcoin setting up for a massive rally? It looks like it, but not to dollars. It looks like it's setting up for a massive rally compared to other cryptos. So it looks like it's about to rally compared to stable coins and shit coins. Let's look over at our non-stable coin chart. So this is excluding the stable coins. Definitely looks like, again, it left the bearish control zone, close to a hard buy, not quite as close, back above the 8 and 21. Looked like it's ready to get a weekly bull cross on the 821. Blue slope line and positive momentum. Looks pretty good here. And this is excluding the stable coins. So the stable coins are making Bitcoin look substantially weaker than it actually is. So what this chart is telling us is that likely we are about to see a capitulation event out of stable coins into, we are likely to see a capitulation event out of shit coins and into stable coins or Bitcoin. That's what it looks like. Or Bitcoin's just about to go absolutely parabolic. That's possible as well, based on what this is telling us. But, you know, obviously, got to give our bias to the downside just because we're clearly in a very strong downtrend. All right, so just got a couple more here for today, and then we'll fill out the charts as the week progresses. I'm sure we're going to see some big action in the markets this week, so we'll have plenty to talk about. We should be able to nab some nice trades this week as well. Seen a couple of setups. We'll talk about them in the group. So XAU gold breaking down to new lows, losing key support levels, confirming into a daily bear market, backtesting key levels on our weekly and monthly charts. Does not look good right now. We are below the 200 exponential. It is now red. We're below the 200 simple. It looks very close to flipping. It looks like we found support, put in a lower high, broke down below support. We're backtesting support as resistance. We know what happens typically if we cannot reclaim this clear level, which was obviously, we talked about how important this level is. It's 200 exponential, it's 200 simple, and it's all the support that whole time we were hanging out at that level. So now this support, this was blue, it was our buddy, it was helping us stay up here. Now it's resistance. And the same with the 200s, you know, and that's what they symbolize when they flip red. They're now resistance. The slope is to the downside. They're resistance when we get back up to them. So likely we get rejected, make our way down the rest of the way to the 382, which would be a sub $1,600 gold. And then eventually, if that confirms a bear market on the weekly on gold, we likely come down to the 0.5 at about 1471. You know, and then according to, you know, the master, Charles Dow, that might be a buying opportunity. Maybe. The monthly chart looks terrible on gold. Threw up in my mouth a little bit. You know, clear, bear, confirmation. You know, and we know where that takes us to. Likely these two supports and the 200 exponential and simple moving average. 1350. You're like, we'll never go to 1350, you son of a bitch. All right, 1517. We'll start there. And then when we get to 1517, we'll start talking about 1350. It's easier if we talk in 10%, you know, increments. Silver. So we got the little back test, slightly higher low, coming up here again to test that resistance. It's not like a cut in stone, like beautiful, like super well drawn resistance, depending on what time frame you look at, you know, and how you kind of like finagle it around a little bit. But something along these lines, you know, arguably, it's a little subjective, but I would say something around that. We had a kind of breakout right here. It kind of got rejected. We're back here testing it again. There's definitely a possibility silver could break out and have a push up here. You know, you could say we have something like a channel down here. I wouldn't argue with you. Looks kind of like that deal going on. So we're trying to, you know, find a bottom, and then obviously a breakout would give us a strong, powerful move back up to backtest some resistance around 2150. Seems likely on silver now if we get the breakout. Now, I'm not saying we're going to get the breakout, but it looks like we probably will get the breakout. Silver has been strengthening compared to gold after been getting just absolutely beat down. And it really does look like it wants to have some kind of bullish move as of late. So that would be the measure move. I don't know if we get that high up here. Probably have some trouble around the 200s. We have broken above them and got rejected previously. but it seems like, somewhere around in here seems likely for a push up in silver. If it can get a push up, I mean, it might just go straight to $12. Oh, 3 off there, didn't I? Thought I was going to say 0. Silver's not going to go to 0, but it could go to $12. So GSG is next. So GSG, that's the iShares GSCI Commodity Index Trust Fund. Whew, mouthful. New lows right here. Obviously, back test, trying to get back above clear resistance, and was not going well. So we'll see what happens from there. Seems likely, obviously we just put in new lows. Seems likely we revisit those new lows at $20. And then we'll see where the breakdown takes us to. Clear support about 18. So we lose another 10%. That may be a buying opportunity. That's also going to look like confirmation into the bear market. So maybe we get a buying opportunity at 18. We run it back up to 21 for the back test of the 200s, and then it rolls over and goes lower. Definitely a possibility. This is a little more heavily weighted towards energy and a little less heavily weighted towards commodities. So we could see. We'll see how the different markets seem to respond. Looking at LNG next, Cheniere Energy, obviously a liquid natural gas, proxy. This just flipped the slope line over to red, and we got one of our classic rejections. So here was a high, here was a lower high, and a back test of the 200 exponential while it's still blue led to a clear rejection. We now have red slope flipping right here, and up here trying to retest, and looks like probably getting rejected and going to roll over. Now we'll see what happens, but this bearish divergence that took place, rejection, was perfectly tied in, with the slope line right here. So it seems likely we're now confirming a lower high, and then we're going to come down here, probably put in a lower low. And then we get down here to around like 136 to 140. Looks to me like a buying opportunity. I'm not prepared to say there's like a macro top on, any of these assets that have been going parabolic lately. But definitely starting to look a little toppy on the energy department. So, and then next we have Mosaic. So Mosaic, obviously, into like fertilizer and whatnot. So this was another one of the big trends. Obviously, energy, nat gas, oil, commodities in general, fertilizers, wheat, corn. There's like a bunch of these like real popular trends for like the end of the world type scenarios and everything. And then obviously like all the safety stocks, and you're supposed to go to bonds, and you're supposed to go to all, and none of it has worked. The only thing that's worked has been basically what we did. Be early for all the good trends, and be, essentially dollar strong, de-risked. And, that way we're liquid, and at any point in time we can just deploy, and we'll be able to capitalize on this trend, the whole way down, massive amounts of swing trades, nice, beautiful trends in energy, uranium, producers, stocks, etc. There's definitely some potential here for the next big trend. We just have to figure out what it is. And there's nothing really, showing its head yet. Like maybe it's gold and silver producers. Maybe it's, whatever. I just don't see it. I don't see any bottoms yet, or anything that's giving me signs of a bottom yet. There's some potential, but I don't see it. So for right now, what is the next big trade? What's going to get us through this next quarter, this next half, this next year? I honestly don't know. I don't know what it's going to be. Maybe it's a trade, but not a bull trade. That's a possibility too. But I don't see now as a good time to be entering shorts. Obviously, I'm taking profits on my Apple short. Like I'm not taking profits just for the hell of it, because we're hitting targets. We're hitting support levels. That's our targets to the downside. So we're seeing that across the board on a lot of different assets. There's still a little more downside potential, but we're getting to the point again where we could see another bounce in the markets. So is it possible we bounce, for a couple weeks or a month, and then we sell off brutally and put in much, much lower lows, and then, we rally for the last month of the year? Definitely a possibility. Definitely a possibility. And that's like the dream scenario for bears, because we end up, rally into the year end, and then everybody's like, oh, this is it. It's bullish now. And then just the crush continues into the new year. We'll see. Maybe not. But for me, this looks to me like it's headed down here to the lows again, getting ready to confirm into a bear market, retest the lows, a high, a low, a lower high, likely a lower low, continuation or confirmation of a downtrend, back test of a 200 exponential and simple, from down here maybe, back test around where we're at now, 50, 52, and then confirmation into a bear market, and we go much lower. Looks like it to me. This is when you want to be in it right here. According to the blue slope on the TDMACD, the free indicator currently on your screen right here, it said, hey, be long through this. It said be short through this. And then it said be long through this. and now it says be short. So do we trust the indicators, or do we just say, well, the indicators say it's bearish, but I've got a feeling. Feelings. I lost all my money, but my feelings still work. All right, we made it to the end. Hopefully everybody's enjoying the stream tonight. What's up, Ezekiel? Good to see you. Still maintaining the downtrend in prices. Yes, sir. We are still very much in a downtrend. No changes so far, but we could definitely see some potential bounces, and we'll capitalize on that, obviously, in real time in the group. And, I'll keep you guys up to date on the channel as well. Appreciate everybody tuning in today. I'm going to start doing these static videos again. I've been a little slack lately. We obviously lost power with the hurricane and everything, but I've been working on some other stuff. I potentially have a couple things in the work that will benefit the community. I definitely do have things in the work that will benefit the community, but, potentially be done soon, hopefully. So that being said, going to go ahead and wrap it up there. Appreciate everybody tuning in today. It is 9:18 p.m. Eastern Standard Time on Sunday, October 2nd, 2022. And as always, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Crypto Trend Trader, appreciate each and every one of you out there. Take care of your family, take care of yourself, protect your capital, protect your principal, and we'll see you on Wednesday. Crypto Trend Trader, and I'm out of here.